let's start the session. So let me first set the context for today's session. Why I thought that I will, have this live session because a lot of common questions I thought I can answer in this forum, and I already have got a lot of questions over Telegram channel, which I thought I will answer, and a lot of your queries will automatically get answered through that. Yeah, so I have decided on certain topics based on most frequently asked questions which I was getting from the Niveshopedia members in the last 15 days or so. So the first topic that I thought I will cover about market or Nifty's expectation for next maybe 1 or 2 years or 2.5 years, whether Nifty can go to 25,000 or whether it will correct to 10,000 or 15,000. Yeah, so that you don't have an unreal expectation at least from the market. So we'll try to arrive at a broader range of Nifty for the next 2 years. We'll go through the Nifty's trend. I will try to present the chart which I've already drawn for you all. Okay, and then we'll try to predict some kind of range which Nifty can take over the period of next 2 years or so. Yeah, and then given the market condition or the range in Nifty, what should be our trading strategy? This is going to be a very very important session. Please don't miss this topic because a lot of you had this query: when to enter and when to exit. What are the key factors that you should be looking at before you decide to take an entry into any of the stock? Yeah, so what are those key criteria that everybody should look at before they decide to take an entry? Yeah, and then comes the exit strategy, which is again very very important because a lot of you I have seen that they're doing mistakes in exiting. They don't have their own goals, they don't have any rules whatsoever. They are just simply entering into stock, but many a times they don't exit from the stock at the right time. Yeah, the third topic that I thought I will discuss about hedging through option strategies. This is again very important because a lot of people were asking this question, sir, we don't understand how options behave, how we can decide on option strategies, when do we enter into those strategies, and what are our expectations basically from those strategies. And then finally the question and answer session. So let me first present my screen. Let's see Nifty's movement in the last 10 to 15 years. So what I'm going to do is I'm presenting my screen. Yeah, so this is Nifty's chart. Okay, so what I thought that we'll just go through some past trend and then arrive at certain kind of logic. What I am going to do is I will take the practical approach, see Nifty's history in the past, how it has behaved. Okay, whenever there is a correction, how it behaves and what happens next. Okay, so I am here in 2008 2009 where market corrected sharply, right? All of you know that it was very well known financial crisis during that time when Nifty corrected by almost 50 to 60% from 6,300 to 2,500 level. But what happened subsequently was very interesting because Nifty recovered very well, and there was a V-shaped recovery. The same way when we are seeing now after COVID, right? There's a V-shaped recovery here exactly, and Nifty went on to give 140% returns in next 1.5 years. You can see starting from March 9 till October 2010, Nifty gave 140% return. So what happened next was even more interesting. You see, Nifty went into consolidation zone. Okay, and if you are observing it very closely, starting from November 2010 till Feb 2014, that's a period of 3.5 years. Nifty actually didn't give any return at all. If you see, it was around 6,300, and in 2014 also Nifty is around 6,300. So what happened to the long term investor or somebody who have invested their money into Nifty? They didn't get any return at all, right? In fact, in between there are a lot of movement, big movement, sharp correction, and then there's a sharp up move as well. But overall, if you see for the 4 years, Nifty didn't give any return. Yeah, and if you are observing, this is very important, the maximum correction that Nifty took was around 25 to 30% from this low, this high to this low. Yeah, then what happened next subsequently after that? The moment Nifty gave breakout from this channel, the next 1 year was very very important because Nifty again went on to give 45% return, which is again very 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 good return, right? In 1 year's time, Nifty has given almost 45% return in 2014 to March 2015. Yeah. Then what happened subsequently? Again, Nifty went into consolidation zone. So Nifty usually follows this practice. Whenever Nifty gives a very sharp returns, okay, in a quick succession, then what happens next is Nifty goes into consolidation zone. So you can observe from Feb 2015 till Feb 2017, Nifty actually went into consolidation zone. It corrected sharply, it went up sharply, but it didn't give any return in 2015, starting from Feb 15 till March 17. Okay, and the maximum correction again, low from high was around 25%. In the last chart also we saw that correction was around 25 to 30%. In this time frame also the correction went on to 25%. Of course there could be different multiple reasons that market will give, for example in 2016 they gave the reasons that NPAs of the banks are rising, there are global factors that are impacting the market. All those reasons they will, just try to find out whenever Nifty has to fall. But the point over here is that whenever you are seeing a sharp increase in Nifty, then Nifty goes into consolidation zone. Yeah, you can. We have seen in the past in 10 to 14, and then again from 15 to 17, there was no return at all. Okay, let's see what happened next. In the next 1 year, when Nifty gave once again the breakout from this channel, Nifty has given 22% return in a year. So this is a very normal return. This is not something which is abnormal return. Yeah, for equity to give 20%, 15% return, this is usually considered to be a normal return. It's not an exceptional return. So what happened next is that Nifty was trading in the channel that was a rising channel. Okay, so it was not in a what do you say, in a rectangular form. It was rising because this was a normal increase. It was not something which was very abnormal. So this the movement in Nifty like this, okay, which is rising, okay, it is making newer highs and higher lows. This is a normal movement in Nifty. Yeah, but it is rising. This is a very important point to note. When Nifty gave 20% return, it is rising. Of course, in between there are some correction. Yeah, and again, market will always find their reasons. For example, again in 2018, somewhere in Jan 2000, at the end of Jan 18, when I think in budget when they introduced this long-term capital gain taxation at the rate 10%, so Nifty corrected sharply. Yeah, so the Nifty will always find their way to correct it. Okay, they will take some news and it will correct. But the point to note over here is that if you are seeing a sharp increase in the market in 1 or 2 years time, then Nifty goes into long-term consolidation for at least 2 to 3 years. Yeah, but in this case, since this increase was not very sharp, so Nifty was increasing in this rising wedge. In between, of course, there will be a lot of movements. Yeah. So now what happens next? So you can see then came the COVID in Feb 2020, and we had seen almost 60 to 70% correction in Nifty from 12,300 to 7,400 odd levels, right? And then came the interesting part where we have this significant up move in Nifty. Yeah, you can see starting from 7,900 or 8,000 odd levels, Nifty went on to give 18,400. Okay, so it was just moving in this straight line. Of course, in between small corrections were there, but Nifty had given almost 130% return during this 1.5 years. Yeah, starting from March 2020 till October 2021, from where again it started correcting. But you see this period 1.5 years, Nifty has given 130% return. But is this something which is new? No, right? We had seen in 2008 similar thing happened. Nifty gave almost 140, 150% returns. Similar thing happened here after COVID. Nifty again gave 130% return in 1.5 years. So what's next? What are we trying to imply? Because this is a post facto analysis. Anybody can do. You would say that you are seeing the chart and you are giving some, just telling the facts. But the important point to note over here is how do we predict after looking at such trend whether we are having realistic expectations after that. So this is what I'm trying to tell you. I will not tell you something which will please you over here that Nifty will go to 15,000 25,000 level or 30,000 in next 2 to 3 years, which I personally don't believe, right, which I don't foresee. So what I am foreseeing, in the next 2 years time, because why I'm saying now is because from 18,600 Nifty corrected almost 11 to 12% over here, right? And again it went up. Okay, this will continue, going up, going down. This will. So what I am expecting market is that market may correct by 25%. That is the maximum correction which I am telling you. Okay, so I am not telling that it will correct in next 6 months or in next 1 year or 2 years, or I'm also not saying that this will be the correction which will definitely take place. This is not what I am saying. Just please listen to me very very carefully. What I'm saying, I am trying to be very practical, because we have seen in the past that whenever market has given such kind of return, the maximum correction that it can take is around 25 to 30% range. So on an average, if I take 25% as the correction range or the maximum low that the market can make, so I am taking 25%. So starting from 18,500, if I expect 25% correction, maximum correction, yeah, so market can go maximum till 14,000 level. Okay, so this is what I'm expecting. So what I thought that Nifty could be in the range from 14,000 to 19,000. Why I've taken 19,000? Because I don't know whether it has already made its top. There's a possibility it may, go up little bit again and start correcting from 19,000 level. But somewhere I feel, because by looking at the past trend as well, whenever there's a correction of 12% or more, it starts consolidating. Yeah. So in this up journey, I never saw 10% or 15% correction. Of course, there was some correction of 5, 7%, but it was not more than 12% or something. But this is where we have already seen around 12% correction. Yeah, starting from October till December 2021, we saw a sharp decline. Yeah, so this is where I believe that market is now going into consolidation zone, and this consolidation will not be for 1 month or 6 months. So usually this expectation goes for long term, at least for 2 years or something like that. Yeah, so please keep this in mind. See, again, I'm not saying that this is going to be, I am going to be 100% accurate in my analysis. I would be more than happy if market goes to 25,000 in next 2 years. I would be more than happy, and I'm happy to be proven wrong over here. But we have to be somewhere, we have to be practical. I can't show you some picture. I know a lot of people are showing that, okay, economy is doing very well, the growth expectations are very high. Of course, all those factors are there. I'm not, usually I'm not being very pessimistic. I'm always on the bull track. Yeah, so if market goes to 25,000, I will be more than happy. But I'm just trying to be realistic and just present you what Nifty is telling me to. Yeah, so this is what I think personally, 14,000 to 19,000. What do you think? You can let me know, maybe through personal text or something. Yeah. But okay, now given this situation, what could be the moment in Nifty? What I think. So you can see, Nifty will go like this. Okay, we don't know what is going to be the moment, but it is going to range within this channel. So it could move like this, or sometimes it will go up, sometimes it will go down. It may touch, 25% lower side if there is some news, and the market eventually will find some or the other news. You will keep on hearing about Fed interest rate hike because inflation is going high all around the world. Bond yields are increasing. All those reasons, they will keep on giving. So, as I said, that once market has decided that it has to consolidate, it will find its own reasons to correct. Yeah, and then everybody will start saying that, okay, this was not foreseen at that time. Now this is something which is new, but this is not new, right? We now know since last 6 months that inflation is increasing, and the only way to stop the inflation is somewhere to increase the interest rate by Fed. Yeah, even for RBI also. Yeah. So all those reasons market will find, maybe if not inflation, somebody will come and say that Russia Ukraine tension is happening, or somewhere across the world some geopolitical issues are happening, and then market is correcting. So all those post facto analysis will happen once everybody sees the correction. But I'm not going into that. I'm just telling that market will find its reason. It could be any news. Yeah, because what we need to do is we need to be prepared for all those things. Yeah, that there could be correction, but there will be sharp increase as well. So how to utilize those momentum in between? So this is what I feel that market can take over the period of next 2 years, maybe till. So I don't know about that period. Yeah, how long it will consolidate, whether it will be 1 year, whether it will be 2 years, or whether it will be 3 years also. Yeah, but this is some practical expectation that we can have. But having said that, so I am very bullish about Indian economy. So it's not that market will always consolidate or it will start going in the downside direction. Ultimately, market has to follow the trend which it is following over the long term. And what is that trend? That is only one direction which market is taking. You just forget about this consolidation, Joe. Market will always move upwards. Yeah. So Indian economy as such, of course, it is going to do very well in future. It's an emerging market. We are in developing country. We have a lot of scopes for improvement. So ultimately, market has to go in upside direction. So what I'm saying is, once market consolidates and start moving in the upside direction, you will again see a very good increase in next 1 or 2 years once it gives the breakout from this region, and that will again be around 25, 30% or 40% increase. Yeah, so what I have put over here, 2025. This is what I'm expecting, that once it breaks from this channel, you can expect almost 24,000 in Nifty. So this is what I have considered is around, on an average, 25% return in 1 year's time once this breakout happens. So now my Nifty can go to 24,000 levels by financial year 2024, 2025. The important point to take from here is that we should not stop investing in the market. Yeah, this is the best time where you build your long term portfolio. This is the best time. You should not be building a long term portfolio when market is always giving 10%, 15% in 3 months time or 6 months time. This is the mistake that we do. A lot of people are still investing, trying to build their long term portfolio every now and then. So what you should be doing is, whenever there is a correction, you should put some amount in your long-term portfolio. This is the best time where you build your long-term portfolio. Of course, you are investing in long-term portfolio only when your horizon is more than 2 years. Please don't invest, if you think that market will give you extraordinary return in your long-term portfolio within 1 year's time. Yeah, and you start getting frustrated because you have to be very practical in your approach when you are expecting from the market. So yeah, please keep in your mind, so whenever there is a correction, that's the best time that you invest. So what I can give some suggestions for that, how to build your long term portfolio. Yeah, if you are not expert in technical analysis or you are not doing fundamental analysis, this is for the general population. But what a general person can do who doesn't have much knowledge about technical analysis is, they can follow a rule of 5 is to 10 is to 20. So that means that whenever market corrects by 5% from its previous high, you invest certain amount in your long-term portfolio. When market corrects by 10%, you again increase certain amount in your long-term portfolio. And when market corrects by 20%, or a stock, which you thought that you want to invest in long term, if it corrects by 20%, you again increase your allocation. So what happens by doing this is, somewhere you are averaging your positions in the long-term portfolio in this next 2 years. So maybe somewhere around here, if a stock has made high here and it has made low here, your average cost is somewhere in the middle. So what will happen is, if you are holding that stock for 2 to 3 years, then again once the breakout comes, you will see very good returns from that stock. Yeah, so don't stop investing. Long term investing should always be done, because I feel that the stock market is not your primary source of income. Most of us, or most of you, are either in business or a salaried class people who are getting some primary source of income from somewhere. So whenever you are getting your monthly income, just try to park it somewhere in a RD or FD. Yeah, and whenever you are seeing such kind of correction, 5% or 10%, it's the best time that you utilize your FD or RD in building your long term portfolio. Yeah, so that is about long term investing. Now what about momentum investing, which we usually do, and whatever I share mostly for the swing trading purpose. We will have a lot of stock specific actions that will continue even in this period. Lot of stock specific, sector specific, actions would be there. So don't worry about that. You can keep certain portion of money for momentum trading, certain portion of money for your long term investing. Yeah, but when you are doing momentum trading, what is very very important key criteria, or I would say the trading strategy that everybody should take care, I am going to tell you now that. Now, how should you be doing the momentum trading? Again, very, very important point, because it will not be so simple as we had seen in last 2 years. Yeah, after COVID, we had seen in 1.5 years that your technical analysis was giving you superb returns, right? But what will happen in next 2 years? It will not be so easy that you just pick a stock based on technical analysis and you can expect 30-40% return or even 20% returns in quick time. So what is very very important is fundamental analysis during this time period. It is going to be very very important. Please keep in mind that you need to check the quality of the stock. Please don't compromise with that. And how do you know about that? Is through fundamental analysis. Please check what is company doing, what is the sector's outlook in the future. Yeah, and at least check key parameters of fundamental analysis. Even if you are not pro into fundamental analysis, everybody can at least check whether the company is loss making or whether it is a profit making. At least that, those very very basic fundamental analysis you guys can do. Everybody can do. I'm not saying that you need to learn a lot of things, you need to attend some course or something for that. If you do, that is very good. That would be an added skill for you. But if you don't want to do, still okay, just see some primary criteria. Don't think that you are from some engineering background or from science background and you can't do fundamental analysis. This is a myth. Okay, so everybody should see the company, what is the business. Okay, few criteria at least. Look at what is the business of the company, what is market cap, whether it is very very small company, try to avoid that. What is the ROE? Okay, return on equity. How much company is generating wealth, basically how much return it is generating out of its equity. okay, and whether company is profit making, loss making, whether it has lot of debts in books, try to avoid those companies. So these basic criteria that everybody should look at before investing, this is going to be very very critical. And try to invest into, even if you are doing momentum trading, try to invest into companies which are undervalued. This is what I practice usually. So whenever I share, I try to see, you know I try to select the companies which within its sector is undervalued as compared to its peers. Okay, so I will always compare within the industry against the peers. So I will try to select those companies because the chances of those companies corrections in case of market fall is much lesser compared to the companies which are having very high P, okay, high valuations. So please keep in mind these things. So next is, so this is about the entry strategy. Okay, for momentum stocks, we'll continue to find based on technicals what are the companies which can give us quick returns in the short term. Of course, we'll give complete focus on the quality of the company by looking at the fundamentals and valuations. So that is one thing. That is about the entry part. Now comes the exit strategy, which I know that a lot of you have that question, and a lot of people were asking that, sir, you give a stock, you set a target, one first target, second target, but mostly we are not able to exit. So that is because of the mistake that you do. You don't follow the rules, or you don't have your own exit strategy. Please don't take me wrong. I'm not trying to criticize your way, but it is going to be very very important for you if you want to trade in next 2 years, or you want to utilize even my calls. Yeah. So there are a few strategies which you can follow for exit. First and foremost, you need to keep stop loss, and that is going to be very very strict stop loss. Yeah, if I am giving some stop loss, or if you are able to find out some stop loss based on your risk appetite, please follow that. Moment you buy a stock, go and if you have Giroda account, you have that great feature of putting GTT order, where you can put your stop loss and you don't have to change it every day. Once you have put your stop loss, that will be there forever till the time it hits that stop loss. So please follow stop loss. Second thing, when to exit, when the stock is giving return. So see, there are different people who are following different strategy. One set of people have a strategy that if I am getting let's say 5% to 10% return in short time, because this momentum stocks usually give you return in within 1 month's time, right? Sometimes 2 months time. That is also a short time only, right? So if we are getting 5% or 10% return, there is a one set of people who follow their fixed rule. Okay, that is called as fixed exiting strategy, where you exit at your goal. So you decide that I will exit at 5% return, or whether I will exit at 10%, or whether I will exit at 15% return. So once you have that rule in mind, you follow that rule consistently and never regret if the stock goes on to give even 50% or 100% return in next 6 months. So because if you regret, the next time you will not follow that strategy. But if you continue to follow that strategy, overall you will make wealth, which would be very good. So that is the first strategy which somebody can follow. Second strategy is that you do fixed plus variable. What do I mean by that? That the moment you have 5% return in a momentum stock in short time, you book some profits. Yeah. For example, I've given a stock. Okay. Don't worry about the targets and all. See, you need to understand this target and stop loss are based on certain resistance and the support level. Based on that, I have arrived at certain targets. But if you ask me whether I'm 100% confident that those targets will get achieved, see, nobody can tell that. Even I can't tell that. Even Junjunwala also cannot tell you whether this particular stock will touch this height and then it will start correcting. Nobody can sell at top, nobody can buy at bottom. This is the basic rule of stock market. So what you need to do is you need to have your own goal. So fixed plus variable, when I say, I mean that you book at least 20% to 30% of your quantity. If you have bought 100 quantity of a particular stock, you book at least 25 quantity at 5% return, and then you increase your stop loss, which I call it as a trailing stop loss, for the remaining 75% quantity to your cost or above your cost. So in that way, you have ensured that you are not coming out of that stock in losses, right? We not only have to, get some returns out of the market, we also need to protect our capital. And this is the only way that you can protect your capital, by following the stop loss or trailing stop loss. So fixed plus variable is very good strategy, that you book certain quantity at 5%. Then again, if stock goes to 10%, you book another 25% there, and you increase your stop loss for the remaining 50% to 5%. So earlier it was to cost, now it has gone up to 5%. So in this way, you are ensuring that you are exiting certain quantity at 10% return, certain at 5% return, but not below that. Okay, so before going to the next topic, I thought I will take some questions. So you need to
Hello,
unmute. Yes,
are you
yes.
getting?
Yeah, yeah, yes, Sunny.
Yes.
Yes,
So
please.
I would like to say that as the budget is released,
Hmm.
and might be that a few sectors or few
Hmm.
themes will work right now
Hmm. Hmm. Hmm.
for a 1 year period. So what do you think? What themes and what sectors will work, and what are the rationals behind it?
Okay, good question. So, okay, of course, I believe that most of you would have already gone through a lot of videos which people have,
Yes.
published it. But what I personally feel is, again, it is not very different than what others are saying, to be very honest, because everybody knows that a lot of investment is going to happen in infrastructure. So that is one theme which will take place. So definitely infra is something which I believe that it is going to do well, okay, over the period of next 1 or 2 years. And if infra does well, then all the ancillary sectors which is related to infra, for example, cement sector, because if you have to build infrastructure, you need cement, right, to build that. So all the ancillary industries like paint industry, that has to do well, right? Otherwise, infra cannot grow. So if infra is growing, then all the ancillary sectors will also do well. So that is one thing. Second is, you need to find out some sectors which had not performed very well during the market journey. For example, auto didn't perform so well as compared to other sectors. So that is something which can perform well. See, these things I'm just giving some idea, but we need to see once the momentum comes into those sector. We need to see when the breakout comes into a particular sector. For example, we found out our textile sector. Okay, we rightly picked at right time, right? So that is how you need to keep observing over the months after the results. You need to see the management commentary as well. Okay, and then we can get some kind of idea which sector will do well, but we need to keep analyzing quarter on quarter basis. Maybe metals also is one sector which I think that should do well, because as the inflation is going increasing, then commodity prices are going to be very high, and then a lot of steel companies, metal companies, they can perform well. And of course, like that, there are a lot of other sectors as well. I don't want to go in too much details. So as and when a particular sector is getting momentum, we need to keep observing and accordingly invest.
Yeah. One more question, if
Yeah,
you
yes,
allow
yes,
me,
please.
that I would like to know your views on the FMCG sector. Is it actually quite penetrated right now?
Okay, that's a good question. See, FMCG is a particular sector, which is very, very difficult to value it, right? It is very difficult to value FMCG sector because there are lot of different varieties of product. Okay, it's not a particular. For example, if you take auto, okay, so you know that these are the products, and then you can get some kind of market view, and accordingly you can value it. What could be the expected? But when you take FMCG, for example, if you want to take HUL, their business is so diversified. Or even if you take ITC, they are into hotel industry, they are into cigarette, they are into different FMCG products. It is so diversified, right? So you don't know, which particular segment of that company will, where the demand is going to be very high. Even though you see that FMCG cosmetic or household products demand is high, maybe other products like hotel industry may not pick. So in that way, it is very difficult to get some kind of idea about FMCG. But overall, this is a sector which will continue to do well in the long term. Usually, I don't prefer to take short term positions into those kind of stocks.
Okay. Thank you so
Yeah,
much.
yes, yes.
For example, recently we had started, you gave a call about NB Ventures, right? So it was according to you a long term pick, right?
Yes, yes.
So, but since the day we have bought it,
Hmm,
it has been
hmm,
constantly rising, and it has given around 10-12% return at the moment.
hmm.
So we had to initially add it on the dips, right? But
Yes.
now that it has not dipped further and rather inched further, so what should be the strategy if our long term pick starts going
Hmm.
up? Should we can we add it upside and average it there as well?
Yes, yes. So, for long-term portfolio, it cannot always be, adding on dips. It can be on increase as well. But when you add on increases, the similar way, the way I showed the chart of Nifty, that the stock also behaves in the similar fashion, right? Stock gives a very handsome return of 40-50% return, and then it consolidates for a certain time period. So just to take example of NB Ventures, since it's a long term and it's quite an undervalued stock, which I personally foresee. And if I am optimistic about this stock, what I will do is, of course, I have added at the first point at whatever recommended price of 120 or whatever. And then what I will do is, now I will not add in between. Okay. So when I will add is, let it give some 10, 15, 20% return and let it consolidate at that zone. And from the high when it makes, okay, from there, if it is again correcting 5%, 10% or 20%, in the same fashion, I will again start adding into that stock. You got my point? Of course, the best strategy again is to look at the technical factors over there as well. When a stock corrects and takes some support from a particular moving average line, or based on super trend line, or there are a lot of factors. And of course, you need to see the valuations as well. But as a general rule, this is what you can do.
Okay. Okay.
Okay. Yeah.
Thank
So
you
I,
so
I will
much.
just go to the next topic. I wanted to cover it briefly. That is hedging through option strategies. Okay. It cannot be very detailed discussion here because it's very difficult to tell you about options basic as of now. What I am telling you is that these strategies are going to be very useful in this market condition when we are believing that market will consolidate. Okay, in next 2 to 3 years. So these strategies will help you a lot. Okay, whenever you see there is a sharp increase in market, and again market takes resistance from a certain point and starts going down, then you can enter into a bear call strategy. See, I am personally not giving a lot of calls for these strategies, because the uh, this is this cannot be for general public, yeah, because people don't follow the rules. I have specifically told that you should not be doing it if your capital is less than 3 lakh rupees. Yeah, a lot of people I know, there are a lot of small investors in my group. So if I give these calls, sometimes they feel that this will give very high accuracy and quick return, so they tend to invest their money without understanding the concepts, without understanding the risk involved, what is my purpose behind doing that, and most importantly, that they are doing basic mistakes in entering those spread strategies. So I am personally not giving too many calls of spread strategies. Similar way, there is another strategy which is called as put pull strategy. So in this range bound market, whenever you see a dip and you see some reversal happening from the support level, then this is another spread which you can take. Okay, similar way, you are entering into bear call, there is another strategy which is put bull spread, where you sell the uh, near strike price put option, and you buy far strike price put option. So that is giving you benefit when stock market is going in the upside direction. So these are the two strategies which you can follow. But remember the rules, that your capital should be at least 3 lakh. You don't invest more than 10% of your capital into option strategies. Okay, you only do when you have 90% of your equity capital already invested into long positions in equity in some of the stocks. Then you can use your 5 to 10% of your money to enter into these options option strategies. Any question? I can just take one or two final questions.
Hi, this is
Yes,
Dattath,
Ashish.
right? I have a question regarding the option strategy that you were mentioning. I'm
Okay.
just wondering, suppose if you have a long-term stock, so
Mm-hmm.
and I know that maybe in the medium term or the short term it is going to go down. Can you use the simple strategies like say maybe a sell call option or something like that? Or do you suggest or you don't suggest any naked
You are asking for
options?
stocks.
Yes, stocks. I'm holding that long-term stock, but I want to
Mm-hmm.
use this option strategy also.
Okay, okay. You can definitely do that, but you need to know the concept of options. So before investing, first thing that you need to do is you check the risk and reward. That is very, very important. What is the maximum loss that you can incur? So if you believe that that loss is a significant percentage of your capital invested, then please avoid. This is something which is very, very important. Okay, never do naked options buying, whether it is a put. Even if you are long, never buy put options, naked put option. Never buy naked call option. You can definitely enter into spread strategy, but you need to check the risk. What is the maximum risk that you can have, and where you can check that? Maybe I can share one link. Okay, there's a website called Option Define Edge or something. You can just Google it and you can put your strategy that okay, I am selecting this stock. This is the strike price which I am selecting. So what is my maximum loss, maximum profit that can happen? So please do this basic analysis and see what is the maximum risk that you can have. Okay.
Okay. Yeah. Thanks.
Yeah.
Hi, sir.
Yes.
Uh, my question is regarding how can we like analyze the cash flow for a stock?
First you need to understand how cash flow works. So there are three segments. Again, it will become a very long session if I try to explain, but briefly I will try to give you some thing. So there are three sections in a cash flow statement. First is called as operating activity, cash flow from operating. That is the cash that you are generating from your operations, that a company is generating from its business. Second is called as investing activities. So usually you will see the cash flows are negative in investing activities. That is because they are expanding their business, they are investing into plant and machinery. Third is called as financing activity, that is related to your buyback or share capital issue. So you don't have to give too much focus because it doesn't change frequently. So where you need to focus is operational cash should be positive. Okay. But so investing activities are usually negative because they want to expand their business. They see there's a demand, so they want to expand. So overall, sometimes you can see that the cash flows are negative, but it is still a positive sign because their investing activities cash flow are higher than the what they are generating from operations. But operational cash flow should be positive, but investing, if it is negative and that is making overall cash flows as negative, then it's not a bad sign for the company. Okay.
Yeah, thank you, sir.
Hello.
Okay. Yes, please.
Good morning, sir.
Yeah.
Thank you for your valuable time and the explanation for the all the concepts clearly. And I also regularly follow your calls in the group, and I made some good profits also out of it. Thank you very much for your service to community.
Thank you so much. Okay. So I think with that we can end our session.